when we're talking about standards, it seems really crazy to me that anybody wants to argue when if you can't evaluate a model before you've bought it, like who on earth would buy anything else in their life if they couldn't understand what it's going to do for them?
Over the last decade or so, there has been this emergence of a number of new, smaller, but very specialist modeling companies, and there's numerous of them around today. And I think that's what we're going to dive into more now, around accessing the models, validating those models, and deciding which model is most appropriate for your portfolio. And there's some really exciting breakthroughs that have been happening quite recently over the last 12 or so months that are going to help with this very traditional problem, particularly for smaller teams, smaller cat modeling teams who maybe don't have a lot of resource for doing this sort of model validation work. We're going to touch on themes around standardization of it, access, and we've got a great panel here representing various different angles on this topic. So I'm going to ask them to kick off by describing a very particular initiative that's happening right now that I think is very, very fascinating and very interesting and could create quite a breakthrough in the market's ability to test and validate new models and choose new models and different models that are most appropriate for them and for their portfolio. We're going to discuss that a bit about what that means as well. How do you know this? So let me kick off, describe what's going on right now. I mean, James, you've been involved in this for quite a while and been on the journey of which started with Oasis itself and how that's become available to the market.
We've been working with Oasis. Initially, the project was to kind of test the kind of readiness of the Oasis framework for use within the real world of cat modelling. So that was the original project. So we've been running an industry-grade cat modelling platform based on the Oasis loss modelling framework since January 2017. So we're in our 9th year of doing it, and I think the experience of kind of doing that has made me certainly reflect on what it takes to adopt a new model, a new view of risk, and it's no small undertaking. So that's why model, what we used to call validation and now sort of call evaluation, is such a key topic, I think, because as a user of models, you have to find a way to evaluate them against your book of business. It's not a small undertaking in terms of resource and effort, and there are so many little things that can trip you up along the way. So having done many, many evaluations and seen all of the ways they can go wrong, I was particularly pleased when Tom came along with MaxInfo and kind of said, we're gonna solve some of this, and I thought, well, what better way is there for me to kind of help than to try and support that? I'm talking from a model exchange perspective, particularly. So Model Exchange is now owned by Verisk, was formerly NASDAQ's risk modelling for Catastrophe's product. Thank God I don't have to say that anymore. We wanted to work with MaxInfo to kind of help companies that wanted to adopt new models to be able to utilise our Oasis platform, which has 15 different model vendors kind of publishing their models within it. It uses Oasis under the hood, so everything is in Oasis format. So uses the same financial model, so the results are produced using that same FM. So we kind of felt like from a loss model evaluation perspective, we could really add something to the party here. So I think we've always offered evaluations to people that want them. So anyone can come and do a model evaluation on our platform. We still do that, but there's so many reasons why that's hard. To be able to now facilitate that same model evaluation using MaxInfo to kind of drive it and drive all of the kind of tough work that goes into making that a successful evaluation. That's what we all want at the end of it.
And for anyone who's maybe not been around as long as that, this journey started probably even before that with the development of Oasis originally, more like 15 years ago originally. But then this what you were involved in originally, which was then making that available to companies who didn't themselves have the resource to actually install and run Oasis themselves, was that first step. And now I see this, the second step, in terms of now making the ability to evaluate models on Oasis a really critical next step. But Stephen, let's move on to you. And maybe you can just set the scene a little bit about what you're doing currently.
Touching on James's point there about historically how difficult it is to do a model evaluation when you're quite a small, lean team and you don't have the luxury of a big team and the resources around that to have a specific dedicated R&D team to do the model evaluation. And you still have your day-to-day BAU activities to undertake. Having gone through the switch of vendors from one big vendor to the other recently, and having to go through the major model change submission to Lloyd's to get it approved, the internal governance, all the analysis on the hazard and vulnerability side, to go through that with few resources is a huge undertaking, rather. There's a lot of pressure on the team, there's a lot of long hours. So when James came along with the proposition of the model exchange platform, we did the NAHU validation. We're now looking at other frequency perils to validate, which is US flood, SCS and wildfire in particular. And we're currently going through the US flood validation or evaluation, but across the market. So not just Verisk, it's the other small vendors or the niche models, and not licensing those models is a huge advantage for us to be able to undertake that model evaluation and then really have people focus on the narrative about the conclusions drawn from that analysis. And with Tom's team as well, enabling the analysis runs with those vendors and speaking directly with the vendors to be able to really evaluate and look under the hood of the model. And the openness and transparency of those vendors is great for us because we can really see what's going on. And then really coming to a point, okay, take a step back and go, what really is appropriate for our book of business for that model, an individual model. So it's been huge for us, taking the reliance off our team. And it's also good for Tom, I think, for his team to get involved and show their expertise, which has been brilliant.
Tom, you give the audience a bit of a view on what you've produced and what your drivers were to developing the toolkit that Maximum Information has developed, what your motivations were, and describe what you think it is that it does.
I mean, it's probably self-evident from what these guys have just said. So the toolkit that we've produced automates the model evaluation process and everything around that, right? For implementing a view of risk, so you can think about doing model adjustments, whether that's to the loss side or to the event sets directly, and then automating away the really painful processes, as Steve said, around the regulatory reporting, and potentially for some clients, it's investor-based reporting. The motivations are quite funny and deep, where there's probably two major ones for this specific aspect of it. The first one was just, so I was in a reinsurer, and 80 or 90% of our time I felt was just spent wasting time on grabbing data, processing data, cleaning data, not doing anything about what's the so what of the view of risk. That was always the final part that we eventually got to. And effectively the toolkit we have now just automates nearly all of that process away. Like on the hazard side, for example, we have all of the scientific data sets built in the background. On the loss side, we have that too, and we're just starting to bring in vulnerability information as well. But I think there's a bigger picture one as well. I don't think it was just this efficiency thing that I was keen to solve. Over the past 10 years, there has been this bigger shift towards, multiple vendors and everybody in the market now wanting to know, okay, well, I'd like to see what that vendor does and why is it different to this? And one of the things that I think was challenging for me coming from a climate and atmospheric background into the market was that when I saw the use of the CAT models, I think things had been set up to promote efficiency of the eventual output, which sort of narrowed people's use of the models into using them as truths, not really as the tools that models should be. And I think now with the proliferation of all the other alternative vendors, there's this real opportunity to really sort of drive forward thinking on, okay, well, I like that model because of this, and I want to use it and adjust it because it's going to give me this type of information. It might be useful for this type of portfolio decision, but then this other model might be really good for underwriting risk selection in this area, and I want to use that for that. And I think those are questions that we just haven't been able to ask properly before, and have been way too time constrained by doing the basic processing as well to even think about. So it was those drivers that really led us, and most of my team at MaxInfo all come from the market and have lived this pain, I think, along with most people in this room. I think everybody knows what we're trying to drive towards.
I mean, that data point, I think, is really critical. I remember having these sort of conversations for years of, well, someone should just do that work for everybody of, like you say, taking the IB tracks data and processing it to the degree you need to make it usable for model validation and keep that up to date. And it's always been crazy that every single team is having to do that fundamental work with resources that don't really exist. And I think, James, on the data side, you've seen a lot around that as well, but also getting data, because there's the sort of science data that you just mentioned, Tom, which I guess is where your tool is very much focusing, I assume, on that sort of scientific data and
used to be.
Validation
now we've got
data.
the loss side all there too.
And
so,
the loss side as well.
It's all continuous now, yeah. But it was, as you note, it was stepwise process through all of that. Yeah.
But there's the exposure data as well, right? And interoperability. I guess there's a long debate about this as well, the difference between standardization and interoperability. And James, where do you sit on that these days?
One of the barriers of model evaluation is the exposure data piece, right? So I think most evaluations that we've run kind of natively on our system, people come along enthusiastic. Yes, I want to try the model. Yes, I understand what tests I want to run. And then, it's like, oh, have you got the data into the format that it needs to be in to run? No, we haven't done that yet. And that often is either like a complete non-starter from that point, or we have to go back to the drawing board, right? Okay, which portfolios do we want to look at? How are we going to do that? And I think we developed or helped with the development of OED back in 2018, not because we thought the market needed another exposure data format, but because Oasis needed an input format. So we kind of thought, yes, we need to do that. We'll create something which is a kind of superset of seed and EDM, and we'll surely that'll be the easiest thing to do. But it's still massively difficult to convert between data formats effectively. So I think there are tools. Verisk are developing a tool which will be an open tool that anyone can use to translate seed to OED. There's the Oasis tool as well. So there's a few brokers do it. I'd say the big brokers have got a handle on it. So there are ways, but it's still a pain in terms of getting data into.
But what would you say, Stephen, is that in terms of data is the biggest barrier you face in this sort of being able to do what you're about to do? Would you say it is the exposure data and getting that into the right formats?
I think it's a clear issue within the market itself that there's no data standardization, and people have obviously very different views about whether that's a good thing, bad thing, or whether there should be. But my view that should be data standardization. It makes it much easier for this open process. And I think if vendors are being serious about being open and being in a marketplace where it's very transparent and it's not open source because you've got your IP obviously to protect, and that's quite right. But I think if people are being really serious about that concept of being open and transparent, then it's a huge opportunity for the future to actually do that rather than just talking about it and not doing it.
I mean, there are some quite big implications of what's going on here. Well, hopefully there's some big implications because hopefully, this should be the start of some change. So this point around transparency for me, all the model vendors will sit down and say, yes, we're totally transparent. What does that really mean?
Yeah, sure. So I think it's a fair comment to say that there has been differences in that level of transparency between those four vendors. And it's also a fair statement to say the smaller niche vendors have been much more open and transparent about everything, and a willingness to share and open up the model to Tom's team in particular, because they're doing the heavy lifting. But having open and engaging discussions around what their actual model means and their methodology, and to stand by their model, basically, to say that they're confident about its accuracy and how they've calibrated the model, and they feel in a good space around that. Some others are less open and they're guarded about what they want to share, and it's only on a client basis. So whilst we're a client, we don't license certain models.
Yeah.
So we have difficulty accessing what's in the black box, so to speak.
How can you evaluate something if they won't reveal it to you? I mean, you can't.
No, you can't. It's incredibly difficult.
Yeah, it's incredibly. I mean, Tom, what's your experience been like?
As you said, Claire, it's basically a regime change that's happening now, and hopefully it continues to change. I would say it's a process, right? But like if we take like obviously what Verisk's intimations are in buying the model exchange and, trying to keep that independent, keep all of those vendors at bay. I think it shows something that even one of the biggest, the biggest incumbents here recognizes that the market's changing and that there's sort of this ecosystem forming, and they need to be on the back of that. So I don't think we're there yet, but it's getting there slowly but surely. I think one of the things that when we're talking about standards, it seems really crazy to me that anybody wants to argue when, exactly as you just both said, if you can't evaluate a model before you've bought it, like who on earth would buy anything else in their life if they couldn't understand what it's going to do for them? I feel like it's well overdue. Most in the market are well on the path. I think one of the things we, Max Info, often get accused of, but like it's a really full misunderstanding of what we do. I think a lot of people see us as like an automatic like validator, or to the opposite side of that, invalidator. Like you're going to put your model into our platform and it's going to tell you a big cross, can't use it, shouldn't use it, it's a crap model, which is not at all, right? The intention is, Steve said, get under the hood really quickly and start asking the really key questions. So when we end up talking to people, we'd call it a dialogue builder more than an invalidator. And that is a key reason for, as James said, we don't use the word validation anywhere. This is always evaluation. There's standards that are happening or forming across the climate and weather model space at the same time that are sort of, should we be standardizing? Should we be there's that worry that maybe we'll over standardize, but there needs to be this base level so people can make judgments for different decisions. That seems to be coming along at the same time the CAP model standards are coming. And really, anybody in the audience is hearing this and hasn't heard from us or whatever before, and you're interested, please reach out, because I feel like this is actually a community effort at this point. It's not just a Max Info thing. I feel like it needs to happen. It needs support to change. So please get in touch with any and all of us.
And it's such a critical point that there's no hard and fast answers that can come out of a tool like this, right? The decision to adopt a certain model for your book of business, there's lots of factors that play into that. So I think I like your terminology there around a dialogue builder and evaluating that feeds into, ultimately the decision is still, Stephen, your decision. You're not going to just take it from a checkbox, right? I mean, you still need to make that judgment at the end of the day based on what you get out from these platforms, presumably.
That's right. I think the underwriters would like it to be the lowest numbers possible, but that's something different. Inevitably, it comes down to cost as well, and that is a big factor, particularly if you look at your economics of it and ultimately the expense ratio of writing that book of business.
So this is happening right now on not a tier 1 peril model. It's US flood, so it's sort of a developing, emerging risk, more business being written. Just quickly for each of you, is this going to be limited to the sort of second and third tier models of the world, or are we going to reach the point where This is going to transform the dynamic around those tier 1 peril models. The big guys are still ruling those tier 1 peril models, and they still need to be there. Well, do they? And will this get to that point or not?
I mean, it's a long-term project, right? I think we try to level the playing field wherever we can. I think this is a good example of doing that. I think as Steve calls them, frequency perils, which I quite like, are a good starting point. So flood, fire, SCS, they're hard to model. Arguably, you need alternative views of those perils. So I think we'll start there and we'll kind of see where it takes us.
Whilst I agree on the stability point of the big models, that absolutely you don't want them fluctuating every year up and down, I don't see why we have to have the big vendors as dictating the marketplace, really, in terms of reinsurance. I think that should be an open discussion. I guess it's because it's always been there, and then that's the mantra to carry on forward, that they've always been there from the start, so they should carry on. But I'm not sure that's so applicable now, particularly with the rise of the niche models in the future. And I'm not saying this is going to be instant. Of course it's not. It does open the conversation about a mindset shift and looking into these different models that offer a different view.
Tom, final thoughts, and what do you think it's going to take?
I think just the continuation of what we're doing. I really don't think it's an either or. Like, I was trying to think of an analogy, and the closest I think I can get to in my head is, for a number of years, people use Spotify, right? As they're like, everybody got on that after iTunes. But then there's a rise of all of the niche things. So like, I'm just looking at Johnny over here, AKA Jasper the Reggae Doctor, from anyone that knows him from Bermuda. But if you want to hear any of Johnny's reggae mixes, you have to go to SoundCloud, right? And I don't want to listen to it all the time, but maybe a little bit. And it's like, I need to go to SoundCloud. So it's like, I feel like we've got analogies across all of the tech space, that it's becoming so easy to, get anything you want whenever, because you've got all of the different bits feeding together. And yeah, I just feel like cat modeling is already on the way. Insurance is famously slow, so maybe it's going to be a bit slower, but it'll come.
This is really very exciting. So hopefully we'll have more time to discuss it next March for anyone that would like to come along to Exponential Risk, because I think, there'll be more developments since then. And so thank you very much. Thank you.